Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Sculptor Diversified Real Estate Income Trust. And let's just say they're giving us a peek behind the curtain of their real estate finances. And it's quite the financial snapshot. Now, imagine a company that's all about collecting rents and managing properties. That's Sculptor Diversified REIT. They've just dropped their latest update, and while it's not a full-blown earnings report, it gives us a really crucial look at their net asset value, or MB, which is basically the total value of everything they own minus what they owe. Think of it as the company's book value, but for a real estate investment company. What's interesting is that they're categorized as an emerging growth company, and they've chosen to stick with the old accounting rules for now, which is something we always keep an eye on. So they released their net asset value per share as of July 31st, 2025. This tells us how much each share of their stock is worth based on their underlying assets. It's like checking the price of a house in your neighborhood to see what yours might be worth. Here's a look at some of their share classes and their NAVs. Class E shares are valued at $11 and $16.19 per share. Class F shares come in at $10.9835 per share. Class FF shares are a bit lower at $10.8169. Then we have Class I shares at $10.8232. Class A shares are valued at $10.6823. And finally, Class IS shares valued at $10.6441. You can see there are slight differences between the share classes, which is pretty normal, often due to different fee structures or initial investment amounts. Now, let's get into the meat of it, the actual breakdown of what makes up their net asset value. This table tells us where their money is and what they owe. The biggest piece of the pie, as you'd expect for a real estate trust, is their investments in real estate net, which stands at a hefty $615 million. That's the core of their business, properties, and the value tied up in them. They also have an investment in an unconsolidated joint venture for $2.148 million. This means they're partnered with another company on a project, but it's not fully part of their own financial statements, so it's reported a bit differently. They've also invested $60.95 million in investment in real estate debt. This could be like being a lender on real estate projects earning interest on that money. Good to see they have $31.8455 million in cash and cash equivalents. This is the readily available money they have on hand for operations or unexpected needs. They also report $12.36 million in restricted cash. This is money that's set aside for specific purposes like paying off debt or fulfilling certain contractual obligations, so they can't just spend it freely. On the flip side, they have significant mortgages, credit facility, and financing obligations, net totaling $271.21 million. This is the money they owe, mainly from borrowing to buy more properties. It's a big number, but in the real estate world, using leverage or borrowed money is common to amplify returns. There's also a management fee payable of $327,000. This is what they owe to whoever manages the trust. A pretty standard operational cost. And here's an interesting one, non-controlling interest in the consolidated subsidiaries of $31.77 million. This represents the portion of ownership in their business that belongs to others, not the main shareholders. It's like saying part of the company isn't fully theirs to control. All of this adds up to a total net asset value of $406.06 million. That's the company's estimated worth after accounting for all assets and liabilities. And importantly, they have 37.24 million outstanding shares or units. This number is crucial for calculating that per share NAV we looked at earlier. Let's circle back to the share classes and see how the total NAV breaks down. Here you can see how the overall NAV is distributed among the different share types. And as we saw, each Class E share is valued at 11 tenths 16/19, contributing to the larger NAV picture. It's these details that show how the whole company's value gets divided up among its different investors. Looking at the total column, we see that 406.46 million NAVI, which is backed by 37.24 million units in total. It gives you a clear financial picture of where the company stands. And finally, signing off on this report is Ellen Conti, their Chief Financial Officer, on August 15th, 2025. It's her stamp of approval that says these numbers are what they say they are. So what's the story here? Sculptor Diversified REIT is essentially reporting its wealth as of the end of July. The massive value in their real estate investments is the star of the show, as expected, but they're also carrying significant debt to fuel that growth, which is a standard play in real estate, but always something to watch carefully. The different share classes show they cater to various investor needs, and the NAV breakdown gives us a transparent look at their underlying financial health. From my perspective, they seem to be managing their assets and liabilities in a way that's typical for a real estate investment trust. The NAV per share figures suggest stability within the classes, but the slight variations are worth noting for potential investors. The key risk, as always with leveraged companies, is the debt. If interest rates climb significantly or property values dip, that debt could become a heavier burden. On the flip side, if their real estate portfolio continues to depreciate and generate steady income, they're in a solid position. They own a lot of property, and that's likely their biggest strength. What's your take on these numbers? Do you think Sculptor Diversified REIT is navigating the current economic climate well? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up. And if you want more of these deep dives into financial reports, make sure you subscribe and hit that notification bell. Also, join our Discord community for more discussions. It's linked in the description. Thanks for watching, and I'll see you in the next one.